Folks, welcome to the start of the week roundtable. Usually James West does this, but James is unavailable, so he asked me to take his seat, and I am very welcome to do that. I hope everybody's doing great. Why don't we start with Jeff Yasteen? Jeff, did you hear the news this morning about the COVID-19 that Russia has released a vaccine? I wanted to get your opinion on that and ask you how you think that's going to influence and impact the market this week.
Yeah, I think the main thing, and it's important to realize, from what I understand about this Russia vaccine thing, the group that it was tested on was relatively small, 100, 200 people or so. This is from a ex-FDA commissioner guy who was speaking, I think, on NBC early this morning. But I think it just feeds into this overall sort of wave of optimism that is, I think, boosting a lot of these stocks that have been sort of just running off the lows, the leisure stocks, travel stocks, those sorts of things, and sort of enable this rotation that we're seeing out of some of the more highly priced tech valuations and into some of these. And I think it's interesting now that a lot of the banks and insurance stocks, financial services, starting to look really interesting now as well.
And I also thought it was kind of interesting that there was a comment. I don't remember who, but it was on CNBC earlier today, and they said that it was from one of the global biotech companies, and they said that if it does work, maybe there's a way we can get it here. But they were talking about October, and I thought that was very, very interesting. Obviously, election. So I thought that was very interesting. Adam, what do you think, and how do you think that's going to impact the stock market? And do you think this will have any impact potentially on how the polls, and I don't want to this is not a political conversation, but I mean in terms of the stock market, do you think this is going to turn the sentiment in any way, or do you think we're going to remain status quo for the foreseeable future?
Yeah, I think what's happening now, which we discussed in the show last week, is what I call the great mini rotation. We know the rotation is from bonds to stocks and so on and so forth. The great mini rotation is a term that I coined. It's basically when you have sector rotation happening under the surface. So we saw that over the last few days, starting on last week. You saw growth stocks, tech stocks, things that are just absolutely dominating over the last several months really fall out of favor. At the same time, you saw all of the areas that have been lagging extremely badly really just take off. So you have financials, energy, economically sensitive areas of the market, commodities, transports, airlines, cruise lines, and like Jeff mentioned, the leisure stocks that have just taken off. And when you see that great mini rotation happening, it happens throughout history. If you look at the last 10 years, the last 30 years, during a bull market, it's normal to see that rotation happen under the surface. The question now becomes, is this going to be the beginning of a new world where we have a vaccine and all of a sudden all of these beaten down areas take off, like what happened in March of 2009 or what happened in early 2003 or in March of 2020? Basically, whenever a new bull market is born at the end of a bear market, right? Because those areas that have been lagging are in their own little bear markets. Periods are right after a bear market ends into a new bull market. So if we get a vaccine and the vaccine is actually legit and it works, I think the entire globe is going to breathe just a collective sigh of relief. And when that happens, that's good and bullish for both Main Street and Wall Street.
One comment that I just want to make. You mentioned stocks and sectors moving in and out, and you mentioned transports. I've been really starting to get into the transports. I was looking at the transport sector. And for our readers, there's a few freight transport stocks like UPS, FedEx, and a couple of other smaller companies in that exact same sector that are just screaming higher right now. So interestingly that you mentioned the transports. I've been very, very focused on that. Jeff Zinaneri, how are you, my friend?
What's up, Roger? Nice to be with you.
Good to see you. You're always pleasant to hear your view. Tell me what you think about all of this, because you always have an interesting contrarian sort of view. Tell me your opinion on this.
I actually think this is a little bit different than 2009, where the market was really bombed out. We're actually making all-time highs today. So what's strange about right now is we have this huge disparity between reality, the real economy, and the stock market, which is on fire, right? And this is a liquidity driven thing. People have a lot of cash. There's a lot of institutional cash, and people are chasing returns. I actually think that this rotation isn't the sign of a new bull market because we're extended on the bull market front. I think it's actually a warning sign that we're getting close to the end of the high point of this range, because the leaders that we've had have been the stocks that have been fundamentally the most resilient through this entire pandemic. And when we're starting to see those starting to fail, and we're starting to see gold starting to take a big exhausted exhale today, people are putting money into these different places. And I'm a little suspect that these different places are going to lead us to the next leg higher because of the fact that we're already so extended.
Very interesting. Now, let me ask you this question. How do you think this let me take you back a little bit. How do you think this vaccine is going to play? If in fact it's real, if it's truthful, how do you think it's
the
going
Russian
to play?
vaccine? The Russian vaccine? They gave it to 100 people. It might have been given to Vladdy's daughter. It might not. Who knows? But would you take it? I wouldn't take it. I'm not taking the Russian vaccine that's been given to 100 people, right? I mean, we have legitimate good vaccine news that's been put out by Pfizer, that's been put out by AstraZeneca with the guys at Oxford. That's legit stuff that, is having a robust trial of 30,000, 100,000 people. And that could come out in the late fall, early winter. So I'm optimistic about that. But the reality is this: a lot of people don't want to take the vaccine. A lot of people, even with the vaccine, it's not going to eradicate the entire virus. So it's not going to be this silver bullet that's going to make everything all of a sudden much better, right? What I'm interested in seeing, because we've had a lot of bullish sentiment on bad news, we haven't had a lot of real, bona fide good news. I'm interested to see price action on good news. Because if you don't see the same exuberance on the good side, then we'll have confirmation that we're exhausted on the upside.
I hear you. I hear you loud and clear. And I actually tend to, this kind of goes back to the discussion that we had mid last week. Days are just running into me now. When you and I were talking about whether, let's say, somebody comes out with a vaccine, it was interesting that we had this exact same discussion right before the Russians came out with this vaccine.
Right.
And just to fill you guys in, we were talking about the impact if there is it was very interesting. What I was seeing was this: Jeff and I were seeing companies that were making vaccines, and what was interesting, the companies that were not due to come out with the vaccine for several more quarters. In other words, not now, not in the next month or two. They were moving along higher. And Jeff and I were kind of reading into that, and we were both, and please correct me if I'm wrong, but what we were thinking was that this vaccine is not going to be hey, it's coming out, the world is now back to normal, the market comes back. It's going to be a very, 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 very steep process, because a lot of people are not going to tolerate a certain vaccine. A certain amount of people are not going to respond to a specific vaccine. It kind of reminds me very similarly to what happened about 30 years ago with SSRIs, serotonin uptake inhibitors, when Pfizer came out with Prozac. It was a new class of drug. It was a big problem solver. It made a huge amount of money, but at the same time, other SSRIs that were coming, like Paxil or Zoloft, that were coming into the market 4 years later, that were pretty much curing the same thing, were able to gain as much market cap. So what that's telling me, and that's what Jeff and I were talking about middle last week, and we both agreed that the process was not going to be binary. It wasn't going to be like 0 to 1. It's going to be a very bumpy ride with a lot of things coming into it. So that I don't think we both agreed that the market was not going to be as efficient pricing all of that in as a lot of investors believe. So I wanted to kind of get your take on that.
It's like Jeff Z was saying, a lot of what we've seen up to this point, and including now, I agree completely. liquidity driven. The Fed stepping on the gas pedal here. So even what was the old Bill Fleckenstein quote about when the monetary winds are blowing hard enough, even the turkeys can fly. And I think that's part of what we're looking at here. But for these sectors that have been lagging and are now starting to show signs of life, I think what we may be looking at here is we'll see a rally again going, whether it's for weeks or more months, getting to some sort of ultimate top. If there's a bear market, and I do believe one is fairly close at hand, or a very steep correction again, then I would expect to see a lot of these lagging stocks to kind of fall back to this sort of hard bottom and then rally once the selling squall has passed, as where a lot of these other sectors, the tech sectors that have been just so highly in favor for such a long time, those will be the ones that, unfortunately, a lot of people will continue to buy, thinking, man, Apple and Amazon and all the rest are going to continue to trade at these high valuations. And meanwhile, the smart money on Wall Street is moving from those into these lagging, undervalued sectors, because that's where the biggest plays are, not for a month from now, but a year and 2 years and 3 years from now.
Understood. That's a great answer. And Adam, let me get your take on it.
So I think it's a great point that you bring up, whereby you have a vaccine. Is that the be all end all? Does it go from 0 to 100, or does it take time to get there? And then there will be a staggering effect with other vaccines that are, to follow. I think, like Jeff had just said, it's yes to both. But the reality is it's perception on Wall Street that really matters a lot more than anything else, because the market's a forward-looking mechanism, as we know, which means in plain English, it looks forward to what, and it anticipates what's going to happen. And then either that scenario unfolds or it doesn't. And then the market adjusts accordingly. So we know a vaccine will come. The question is when. Before the election, like you mentioned earlier, after the election, will the first vaccine come out and then a better one come later on, so on and so forth. All these are unknowns. If anyone had the answer, so be it. But from a trading standpoint, where do you allocate your money? That can be done in a very easy and concrete, simple fashion that anybody can follow. And the way that you do that is by making intelligent decisions on the facts that are in front of you at any given time. And then when the facts change, you change as well. So my thought on where the market's going and where Main Street is headed as well, clearly the market has casted its vote that we're going to get back to some kind of normalcy in Main Street. Doesn't mean you're going to have record number of people traveling again. Doesn't mean hotels are going to be fully booked again, so on and so forth. That may take more time. But in the next 12 to 18 months or 24 months, I do expect, based on the market action right now, and the caveat is it could change, that we will return to a path of normalcy in the foreseeable future. And that's a good thing.
Right. No, I hear you. And I that's a great answer as well. So let me ask you this question. I'm going to stay with Adam for a minute. If you were let's say you were looking ahead for the next, between now and the end of the year, what would be and you don't have to go too deep. What would be some of the sectors that you would be looking at right now between now and the end of the year?
Sure. So first thing we have to take into consideration, what are any external events that may occur? Like we mentioned, the big one, the huge one is the election. So we have to, incorporate that into the mix in some way, shape, or form. When you look back 4 years ago, before, in 2016, you had the election, the market took a dip. Everyone thought Hillary was going to win, and then Trump came and blew it out of the water. So now the polls are saying that Biden's going to win, and once again, Trump would come in and easily blow it out of the water. So could you see a dip if the polls continue to move in Biden's favor? Absolutely. He's talking about doing a lot of things that are anti-Wall Street and just slowing growth. I mean, raising taxes he wants to do, so on and so forth. If you raise taxes and you look at the S&P 500 earnings, and just facts, and you take away Trump's tax cuts, the earnings are pretty much gone. So that's not a good thing, especially when you look at Jeff Z's point and Jeff Y as well about the markets being extended already and being lofty and overdue for a good bear market. The bear market we had in March lasted, 2 weeks, maybe 3? It bottomed on March 23rd. That's not a bear market in historical context. So when you look back at history, average bear markets, 18 months, short one is 9 months, not 2.5 weeks. So to both Jeff's points and to your point too, Roger, a few weeks ago, you mentioned the pullback, which happened in growth, and hats off to you. It was a great call. you have to be really cognizant of where we are in the cycle. And do we have one of two scenarios unfold? And this is my thinking, really simple. Is it a 1929 type scenario where you get a climax run, or 1999 scenario, you get that big climax run after a decade-long bull market? They call it a climax run, a blow off top, what have you. Sure. And then a huge crash thereafter in both those cases. Or do you have one of those situations where you just kind of, you had this little last hurrah kind of a thing like we saw now, and then it rolls over? A lot of that has to do with, in my opinion, two things. Number one, liquidity, like Jeff Y had mentioned, from the Fed. And also number two, what happens with this virus and the election. There's a lot of tension building geopolitically with US and China. Does that continue to build, or does it go the other way and just, dissolve? And how does the market react? So I think for now, based on what I'm seeing, the market's acting fine, and it is expecting things to continue to act fine heading into the end of the year. So that's the answer to the question. I hope I did a good job.
Definitely. Now, Jeff Z, tell me, between now and the end of the year, what are you seeing as in a broad term, just like Adam, just, you don't have to get very specific. Tell me what you're seeing in the market in terms of maybe specific sectors or commodities or maybe small caps. What do you
think this is a treacherous market for amateurs and for people that are not experienced in the market. I think there are value traps like we haven't seen possibly in our entire careers in the markets all over the place. I think there's businesses that we're going to look back on and say, oh my gosh, why did I think those guys would be around in 2025? Oh my gosh, the writing was everywhere. Nobody walks it, like JCPenney. And lot smarter guys than me tried to, pick the bottom of companies like Sears, like guys like Eddie Lampert, et cetera, et cetera. But in retrospect, everyone has perfect vision. It's like, oh my gosh, how could I not see that Target and Amazon and Walmart were killing Sears and JCPenney, right? And so that's just that's an analogy, but I think that's going to happen across entire sectors, entire industries. Like, for instance, there's a talk now, Simon Properties was in a deal to convert some of the companies I just named, their large, massive brick and mortar retail existence into a fulfillment center, into Amazon fulfillment centers. Yeah. So to think that what's happened in the last year is just a blip and it isn't going to alter the future of how people live is totally insane. I think our people are already altered in ways they don't even realize. And people don't walk away from traumatic, the psychology of masses is people don't walk away from traumatic events like this unchanged. I mean, great grandparents, like the old folks, the old generations that lived through the Great Depression, it was like leftovers for days. You remember that mentality? It's like, oh my gosh, we're taking that home. Doggy bag, please. Like my kids' generation, it's like, 2 bites of the filet. And they're like, no, you could, garçon, take it back. And I'm like, wait, what? And grandpa would be like, no, that's stroganoff for the next 3 days. So my point being is that I don't think that the shift that's happened in people's psychology is something that's just going to 6 months from now, it's going to go away. That's not to say that you're not going to have great stocks. Again, I think that the premiums being paid for some of those technology companies for long-term investments makes sense. People that are thinking, I can't buy Amazon because it's too expensive, never bought Amazon. And they never bought Apple. And maybe they bought Apple when they almost went out of business, when they had to completely rename their, redo their entire branding. But the point that I'm making is that we are in actually a time where those companies are set up to thrive in the new reality. And they're set up to thrive if we do have the silver bullet and go back to the old ways too. Either way, they're set up to thrive. What's in question is that if some of the old style brick and mortar traditional type of companies will have a business.
Right. Very good.
Now liquidity can put a lot of just one last thing. Liquidity can like Jeff Y was saying, can make turkeys fly in the short run, but that effect wears off because then you have to come up with bigger and bigger shocks to liquidity. Do you understand what I'm saying? We've already added $7 trillion between monetary and fiscal. That's a lot of money. What are we going to do to up the ante next time? Where are we going to come up with that money? We're already bumping up against the ceiling of that.
We've been bumping against that ceiling for quite a while. I couldn't agree with you more. It's almost like a running joke in other countries now. We're literally putting our head, into the sand, but it is what it is. I mean, look, this COVID-19, It came from nowhere. So let me ask you guys this. Election is coming up. Small caps have been in a bear market for about 18 months to two years, very, relatively close to 2 years. How do you think the election is going to impact the smaller stocks, the Russell 2000 stocks, and will the small caps begin outperforming or continue underperforming the large caps in light of the election? Let's start with Jeff. Why? And I'll also give you my opinion on this. I have an interesting opinion on this, but I want to hear what all of you guys have to say first.
I'm just going to riff off of what Jeff was saying there, because it's a key point. When we talk about, companies that are not generating profits and will never generate profits in certain cases. Like I was looking at the fuel cell stocks, and I know like Plug Power has been a thing lately. And it's funny because I remember, back in the day, 20 years ago, when it was a $1,200 stock. Now it's a $12 stock, and that's after like a 10 for 1, or excuse me, a 1 for 10 reverse split about 9 years ago. Otherwise, it'd be like a $1.20 stock. And so that's an example of companies where, the technology is moving and all that, but they're no closer to being profitable than they were years ago. And in the small cap sector, to your point, there's a lot of companies like that. And I think, again, going to what Jeff was just saying, you're going to see a lot of these companies fall by the wayside, or their stocks go back to where they were before, back in the sub-dollar range or thereabouts, as the market just sort of renders its opinion that there's no profits there and there's not really a business there. And I think we're going to see that happen, I'm not picking just on the Russell 2000, but obviously on the rest of the market as well. I think we're going to see that as this liquidity wave dries up and the market begins to look beyond that. And if we start seeing, and speaking to the banks and the insurance companies starting to move here, if this is the market perhaps anticipating higher interest rates, which is something that sounds weird to even say, and it's sort of like the widowmaker call of the last 30 years, but if we're looking at something different, maybe because the Fed gets changed under, perhaps a Biden administration, anything like that, it changes all the equations all the way down the line. And now suddenly Wall Street and all of us have to start making a whole different set of bets. And I think that's the bigger point to what Jeff was saying.
And Adam, what do you think about it? Tell me, what do you think about the small caps, especially in light of the election cycle? And again, I'm going somewhere with this. I just wanted to get your guys' opinion on this, and then I'll chime in with what I think. But
sure. So as long as the market, the major indices, the S&P, Dow, and NASDAQ, continue acting well, I think the Russell is going to go higher. Jeff White, I'll take the other side of that trade, because Roger, like you just said, the Russell 2000 has been in its own private bear market. It fell 45% in the last 2 years. That's almost getting cut in half. And if you look back at the 09 bottom, and even back into other prior bull and bear markets, in the early cycle, the Russell is the leader, and it did lead in 2009 all the way for the next several years, and it led by a huge margin. And then, of course, it got way ahead of itself, and then 18, about 2 years ago, like you said, Roger, it just topped out, and then it fell 45%. After a 45% bear market, now we've got all this liquidity, and we've got the other indices doing well. It could really take off again. And then, Jeff, why to your point about the earnings? Yes, a lot of companies don't have earnings, and that could get worse, to Jeff Z's point. But it's a company like Zosana Pharmaceuticals. I mentioned it last week on this show at $1. It's now at $1.60. That's 60% in a week. What do? They're a clinical biotech company, and they're trying to help headaches or cure headaches. So there are, when you have a situation where, I don't want to say fundamental analysis or traditional Wall Street is put aside, but it's more of a, let me go buy, and you get that whole, I need to find undervalued companies, Roger, like the transports, and there's a ton of transports that are taking off, that are just out of favor. And I can't go put my money into growth because NASDAQ and the growth tech stock land are just so overvalued. I could easily see a case where if things continue to move in a good direction and that liquidity continues to, the tap is still on, where all of the indices led by the Russell, once again, the small caps lead, and they could just blast off and go higher.
Interesting. I'm very appreciative. Very good analysis, both of you. Jeff, do you want to chime in before I do my part, or do you want to respond to my? I kind of want. I want to do.
You go first. You go first. I'll wrap it up.
Yeah, because I really want to hear what you have to say about this. I'm very interested because I was doing a report on this a few days ago, and I was thinking ahead. And there's many different ways of looking at it. I kind of threw this out to see if you guys would spot a few very interesting things, and you guys all kind of talked a little bit about them. First of all, the Russell 2000 historically over the last 30 years, it has an extremely high correlation to the S&P 500. And that correlation has not been there for the last year and a half to 2 years for the first time in history. So the odds are, statistically speaking, looking at all the past data, statistically speaking, it looks like they're going to catch up to each other. But with that said, we don't know if it's going to be the S&P coming off hard and the Russell staying where it is, or the Russell moving up. But in either of those two scenarios, I'm anticipating the Russell to remain where it is because it's already priced in a lot of the negative that the S&P has not. Now, in addition to that, if you recall, and I'll address this to Adam's point, the Russell started really diverting from the S&P when the trade war started. The trade war was the catalyst for the Russell to start. We have an election coming up in November. If the election goes to Biden, the trade war is not going to be as big of an issue. But whereas the trade war is not going to be a big issue, we're going to have increased regulations and breaking up companies, which is very, very bad for tech. On the other hand, if Trump keeps status quo, you're going to have the continued trade war. So I'm actually seeing, regardless of how you look at both sides, I'm actually seeing negativity for the tech sector as a whole, whether Trump stays or Biden, for completely two different reasons. So it's very interesting. But I'm not seeing an upside. I'm not seeing a very strong upside for tech as a result of that, especially in the Russell. So it's more likely that we will see the S&P move down to the Russell than the Russell move higher, because I'm just not seeing it as a result of those two scenarios. Because the smaller stocks, they're more speculative. Because they're more speculative, they tend to appraise more of the future into their current value than blue chips, which is why the small caps cooled off so much more ahead of the large caps when the trade war began. So my question is the election going to have that much of an impact on the small caps such that it actually has indirect influence on the large caps, which it has not had yet because of the different directions the elections are moving our climate and how that'll impact technology? Now, I know that was like, there's like three different parts to that, but Jeff, what do you think about all of that?
I want to handicap this entire thing for you, but you have to give me a solid 3 minutes.
Please.
So
that's what we're here for, my friend.
If you believe, as I do, and it sounds like Jeff Y does, and I know you do, and I'm sure Adam has parts of it that he'll appreciate. If you believe that this rally this year is entirely liquidity driven, then what you're going to understand is that, and if you look at the world as I do, I don't just look in the US. I don't look just at the Dow Jones and the Russell and the S&P and the NASDAQ. I look at the DAX, I look at the CAC, I look at the FTSE, I look at the Hang Seng, I look at the Nikkei. The outlier index is the upside of the NASDAQ. The S&P has also outperformed most of the European counterparts. There's an example of mainland China. But the point that I'm making is that the distortion that's happened across markets and the outlier is US mega cap tech, okay? These companies, whether you like it or not, have been the world-beating companies. They have been companies that are making record profits right now when other people are like, oh my God, American Airlines, like, oh my God, can you guarantee my next 6 months, Uncle Sam? These guys are like, we just don't want the referee to come in and break us up. The only thing that can stop this gravy train is the federales, the ref. Because if you let us keep playing, We're only going to dominate more and more and more and more. So it's funny that the only bear case you get against those companies is that the game has to be altered by rules, by laws. So that gets me to the political aspect. If you see the Biden win, which is being priced in pretty much dramatically right now in the market. More importantly, is if you see an entire blue wave, you're going to see a lot of the that US edge taken out, and you're going to see what's led to the gains in the S&P and the Nasdaq, and that distortion, that premium above the rest of the world, narrow. But that's not to say that those other stocks are going to come up to catch up. That's more that the top is going to come down. And if Trump wins, I just think that that edge is going to only increase, because the international pressure is still going to be there in the trade war. The dollar is still going to be in play. And you're going to have a lot of these earmarked dollars that we're investing in FXI, investing in all these different places, looking for these beta adjusted returns, chasing US tech.
Yeah.
Just my
sort of like almost.
I did it in 3 minutes. I told you I'd do it in 3 minutes.
Almost like an analogy of the world is going into US treasuries because it's the only one offering positive.
Well, that's the thing. It's, this is this is liquidity, it's cross asset. It's not like people are like, oh, should I buy this small cap pharma stock, or should I buy Amazon? It's like, should I buy T-bills? Should I buy Boons, or should I buy Amazon? It's a $1.5 trillion, $2 trillion company with hundreds of billions of dollars afloat. So the liquidity they're competing for aren't Russell stocks. They're competing against the major asset classes and the other major indices of the world.
Right. I completely agree with you. All right. I think we will leave it at that. This was a very, very good session. I think we went pretty deep. Love it. Really enjoyed it. We will see you guys next week.